Hey guys, it's Richard from The Plain Bagel. I wanted to make a quick, no-frills video to talk about GameStop, the stock that's skyrocketing, possibly because of memes. But I've gotten a lot of requests to talk about this in my comment section, and with the story developing so quickly, I wanted to get this out as soon as possible. So I apologize, I'm not as well prepared for this video as I normally am, but I think there's a few points I want to touch on, both just to explain, what's happening with GameStop, but also kind of touch on something that I think a lot of people are overlooking that shows just how crazy the situation really is. That, the narrative that we're hearing might not necessarily be what's actually happening. But for those of you unaware, GameStop, the mall retailer of video games, has not been doing well over the past, several years. Their revenues have been falling. Next year, they're expected to lose over $100 million. And this has made them quite the target of short sellers. Short sellers are people who bet against stocks, and typically the biggest short sellers are hedge funds and institutional investors, because retail investors don't typically have as much capacity to short sell stocks. They can, and I'm sure there are a few retail investors who have been burned on this, but usually the vast majority of the demand comes from the institutional side. And to sell something short simply means that you borrow the stock today to sell it, and then you buy it back at a later date to replace the share you borrowed. And you hope that the price falls so that you can buy it back for a lower price, right? You sell the stock today for $100, you buy it back at $50, and you keep that $50 profit, less fees and whatever. But the thing is, people kind of noticed that with GameStop specifically, there was a lot of short demand on this position. In fact, over 138% of the stock was being shorted. So what that means is that there was more short demand than there were actual stocks for this company. And people started sharing this on Wall Street Bets, and it got people buying the position. And Wall Street Bets is an interesting place, to say the least. A lot of people there are just sharing memes, calling each other idiots and other stuff. And usually the content on Wall Street Bets is people making jokes about tossing their life savings on stupid plays. But recently they've been talking about GameStop. Part of the reason for this is that when there's a lot of short demand for a stock, it means that something called a short squeeze might happen. A short squeeze is essentially when those people who have shorted those stocks, they have to eventually buy back the position, right? They borrowed someone else's stock and they need to replace it at some point. And if prices start to rise for that stock, people will be forced to close their positions prematurely. And that's what a short squeeze is. And some people on Wall Street Bets started sharing memes around GameStop, and the idea that, if they push the price high enough themselves by buying the stock themselves, they will force the short sellers to, realize a loss, to lose money on this position, and them buying back their position will even worsen the situation for other short sellers. And because short sellers are primarily hedge funds and institutional investors, the idea kind of got pushed along that this was kind of a fight back against the injustices of the finance industry. Needless to say, the finance industry doesn't have the best track record for transparency, for market manipulation, and things like that. And a lot of people saw this as an opportunity to, make some people bleed. And a lot of people are joining this movement to share collective anger, right? At Wall Street, at financial institutions that have done their own market manipulation in the past. This has been labeled market manipulation by some, and people are kind of retorting that, well, that's not uncommon for the industry, so why does it matter when we do it, but institutions do it on the daily? But there is one point I want to highlight about all this. One thing that's important, I think, for people to know is, yes, this is hurting short sellers. It's hurting them a lot. But at the same time, I think what a lot of people don't realize is there's institutional money on both sides of this bet. On the one hand, I would not be surprised if most of this market volatility is coming from algorithm trades and high-frequency traders. Tools that by their very nature are institutional. There's very few retail investors who have the tools at their disposal to use algorithm trades and to use high-frequency trading. These are systems where computers are essentially trading on behalf of people to make money. And they're very quick to pick up trends. They're also very quick to amplify trends. So, for example, if retail investors are buying a stock and it rises, say, 10%, algorithms will notice that and they'll buy in trying to catch on that trend. But them buying in can inherently, expand that trend and lead to more algorithms joining in. And that can lead to things like what we've seen, where a stock rallies by such a high percentage point. Now, it's difficult to know today how much of GameStop's stock price is the result of high frequency traders. It's something that the figure itself is only estimated, and I don't believe there's a real-time data point that shows how many traders buying and selling the stock are computers. But the other thing to consider that I think really demonstrates that institutions are actually benefiting from this, that certainly there are hedge funds that are making quite a bit of money, a killing off of this rally, is the percentage of GameStop that's actually owned by institutional investors. According to NASDAQ, 111% of GameStop's float, their tradable shares, are owned by institutional investors. These institutions range from companies like BlackRock, where the end user might be that retail investor, to hedge funds, right? And these people are able to own more than 100% of the company by buying the shorted shares that are occurring behind the scenes. You can think of it this way. If I own GameStop, my broker can let someone else short my GameStop position. So behind the scenes, my GameStop share is borrowed and sold by Timmy. And then Timmy can then sell the share to Jimmy. You can see it gets pretty complicated, but the idea being that the same stock can, in the short term, be owned by more than one person. I don't know why it's allowed or what the ramifications are. That's just what happens. But my point in highlighting this is that those institutional owners are clearly going to benefit from GameStop rallying by this amount. And some of those are hedge fund managers. I'm not sure what the percentage is, but I think it's important for people to know that. And I also think it highlights that, with institutional investors owning so much of this company, it leads me to question how much retail investors are actually influencing this stock. It's not to say that people outside of that group who hold GameStop can't influence the stock. In fact, you have options and futures and derivatives that can impact a company stock without actually holding the company stock. So there are ways for a company stock to be influenced by people who aren't actually buying and selling the underlying stock. There's a whole system, a whole market out there that bets on the sidelines and influences the stock's price. And surely that is possible with GameStop. I think I actually read recently that the company's seeing a record level of call options being written on the company. But typically market volatility comes primarily from institutional money, right? A single company is going to have more money than hundreds of thousands of individual retail investors. And that means that any one trade from that one company is likely to outweigh those retail investors. Just as an example, if you take all the people on Wall Street Bets, the Reddit that supposedly caused all this, and they each invested $1,000, it would be roughly $3 billion of, call it, influence. But the stock has risen from $1 billion to $25 billion in this year alone, since the beginning of 2021. So retail demand might be behind this. But I think what's more likely is that retail demand started this trend, and sure, it might have started on Wall Street Bets. It's an interesting place, but sure, they might have influenced people to buy GameStop. And people might still be buying GameStop because of that. What I believe has happened since then is it's been taken over by institutional traders, by people who are happy to push the narrative that this is Wall Street Bets, it's their fault that they did this, while making money from the rally and causing it to extend further. So what does it all mean? Well, aside from kind of punching some holes in the efficient market hypothesis, I don't know. The weird thing about stocks is, to an extent, they can be a self-fulfilling prophecy. GameStop does not have very good fundamentals. But if enough people want it to be a good company and buy its stock price to higher and higher levels, that greatly expands the toolkit available to GameStop to turn things around. But all this is such a strange scenario that I think it's important to know that it's a gamble right now, one way or the other with GameStop. Fundamental analysis means nothing right now with the company. And while people have made a lot of money in the short term on this, it's impossible to know what will happen over the next even 2 days with this stock. It could go up another 1,000%. It could crash back to the way it was before. I don't know. It's a weird situation, but I want to make this video to explain what happened, what might be occurring that people aren't really talking about, and to highlight just how unprecedented this situation really is. Anyway, thanks for watching. I hope that helped clear up the situation and hopefully, helps people understand that it's not as simple as a bunch of subredditors went online and decided to make a stock go higher. That could be playing a big role, a bigger role that maybe I'm even giving merit to. But I think what's more likely is, Redditor started this trend and the institution took it over. Take that however you want. I'm not telling you to do one thing or the other. That's just how I believe the situation is actually playing out. So be careful with the stock. It's a gamble right now, so treat it as such. And yeah, possibly more than with any other position I've talked about in the past. Be safe out there.